VV Nation. This is Glenn E. Tompkins Jr. Thank you for joining us here on YouTube Live for Trending Thursday. If you can hear me, I want to see VV Nation pop up in the screen. VV Nation, if you can hear me and see the screen. All right, so let's pump up the VV Nations coming up in here. If you're brand new, welcome. This is all about finding stocks that are making news in the market. We analyze the stories, we analyze the stocks in the VectorVest software to show the power behind the software, and that's what happens here. So, and at the end, I will give you an opportunity to do a quick fire of some of the stocks that you may currently own or are currently interested in. Another thing, if you're brand new here, I would love for you to subscribe to the channel. We have grown this channel by leaps and bounds in a short amount of time. If you like the content, by all means, please subscribe and hit the icon bell so that you can see when we have new content coming up. All right. Also, like and comment as well. If we get 400 likes today, Joey will come on cam. By the way, Joey is my producer. Say hi, Joey.
Hi, Joey.
There we go. From a perspective of Trending Thursday, we always start off with what's going on in the market and how to trade it. So this week is not going to be any different. We're going to get into the homepage of the VectorVest software. We can clearly see that currently right now, the day is mixed. The Dow is slightly down, the NASDAQ slightly up, the S&P slightly down, the composite slightly up. Key word there, slightly all the way around. Now let me tell you something. The market, and I've been saying this on more than one occasion, the market is Fed-induced right now. The market is taking its lead from the stimulus that the Fed is putting into it. They are now buying individual corporate, AAA corporate bonds. That's huge. That's never been done before by a Fed as far as I know. And buying up bonds and they're buying our debt. There's a lot to keep us from trying to go into a recession. So we are still one of the best, if not the best economy across the globe. I think even better than China. And you're right. How about someone said, never fight the Fed. I never fight the Fed. The Fed is I liken the market. The market is running a race. And as the market is running the race, the market is getting tired. As the market is getting tired, the Fed is behind the market saying, come on, you can do it. Come on, take this drink of water. You can do it. The Fed is trying to push this tired market higher. Who's going to win out? The Fed? Or is the market showing us that we're really at a level where the market is toppy, and will we succumb to that? So just keep that in mind. Can you talk about US dollar versus the Canadian dollar? Cheryl, probably not. I won't do that in here. I probably won't cover that in here. All right. So with all of that being said, let's look at our indicators. Here's our color guard. A lot of yellow in the color guard today. Primary wave just turned back to up. First up day in the last 6 trading days. But if I'm looking at what's going on in the market, how do I trade the market? A lot of cautious. Primary wave was down with the exception of today. Even with the primary wave up today, we have a mixed market. The market is what the market is, and I think that a lot of people are putting more thought and more analysis into the market than what you need to have. The market is what the market is. The primary wave just turned up. The day is down. The market is tired. How do I know? The MTI is still at a level of 1.6. The market is still tired. The analogy I just gave you with the market running the race shows me that the market is tired. The underlying trend of the market has been up, so we've been in a down, up, down, up, down, up. Today, up, up, but a mixed market. And keeping all of that in mind, if you're still investing in the market, whether you're long or short, it's tough to try to hold stocks overnight. Buy your stocks, sell your stocks, but let your stops manage the trade. And if your stops keep you in going into the overnight, then you stay with them. But a lot of the money that's going to be made in the market is primarily on trades more so than the long term. Unless you've got a way long term position that's still going up. I'm in a stock, Clorox. Clorox is a good stock for coronavirus. It's been up about 20%, slowly but surely going up, not blowing the doors off the market. but slowly but surely going up. There are stocks out there that are like that. And if you go to our retirement portfolio or retirement searches within the software, you'll find those stocks that are continually going up. And today we're going to talk about FANG stocks as well. All right, so let's talk about why the market looks the way that it does. We're going to get to the first story. We know that the Fed, am I like really big on the screen, Joey? Joey's got to adjust that. Man, Joey, you got one job. One job. And you know what's going to happen, Joey? That's what's going to happen.
Anyway, I need a nap anyway.
You need a nap anyway. All right. So you know the Fed's job is to look after the economy, and in looking after the economy, they're looking at jobs, they're looking at interest rates. That's primarily what the Fed's job is. Powell says economic gains are at risk if stimulus measures end prematurely. So what does that mean? Congress could be putting together another stimulus package for the people again. Keep in mind, we've spent a lot of money on stimulus. All right. And at this particular point in time, without getting into politics, the printing presses are on full tilt. They are just printing out the yin yang. And even the Fed chief is saying that it looks like Congress needs to put more stimulus into play. We're not even thinking about raising rates, and that's awesome. You know, rates are in between right now between 0.25%, and there's no reason for them to think about raising rates. Inflation is right where it needs to be, but they're going to keep rates low to keep the economy buoyed. Now, on the other hand, Powell says despite signs of stabilization, risks of long-term economic damage are significant. Fed also came out last week and said that the recovery is going to take longer than anticipated. Put those two stories together about the Fed, the recovery is going to be longer than expected, and we may need more stimulus. That's a lot of money being put into the hands of people, which I'm all for. But at some point in time, as you give this money out and you spend stimulus, you got to pay that all back at some point in time, right? Yeah, we do. There's a lot of money out there. So I'll leave it right there. Long-term effects could be devastating the longer it takes, but he's also saying we need to put more stimulus out there. And another story about retail sales rose record to 18% in May. Well, think about that. People were itching to get out of the house, weren't they? And even though they were buying stuff online, it's nothing like being able to go buy stuff for real, for real. Is for real good? For real is good. All right, buying stuff for real. And it makes sense. Sales rose following record declines during coronavirus lockdown. People couldn't go out. Now they're going out to the stores. I've also gone out to dinner with my wife now, and restaurants are exercising social distancing, closing off every other table. But people are just wanting to get out of the house and want to see people again. So it makes sense that U.S. retail sales rose a record 18% in May. But these are my stories about what's going on in the economy. And let's take that into the VectorVest software. Oh, did I do that wrong? What did I do? All right, let's go put that back to where it was there. All right, and let me do it this way. Yeah. Let's go to the market timing graph. Actually, I don't want to go to market timing graph either. I want to go to our watch list of stocks. There we go. Let's go to the watch list viewer. Go to Trending Thursday. What's today's date, Joey? 6/18. There's our watch list for today. All right, we're only looking at about, I think, 13 stocks, 12 stocks today. But the first two that I look at specifically for the market are the VVC, for those people who are VectorVest subscribers. And for those of you who are not subscribers, we also look at the spiders or the SPY. And we're going to go look at them both on a graph. Let's right click. Let's view the stock graph. From the stock graph, we can see what's going on. The VVC tracks the movement of over 8,200 stocks in one ticker symbol. So I'm going to put this on a 3-month graph. This is the market, folks. And last week when the market did fall, it fell below my level of a 20-day exponential moving average, which I use for the purposes of swing trading. And then very quickly found a bottom or found a level of support, bounced back up. The last 3 days, the market is moving a tad bit sideways. Well, why is the market moving sideways? Because the MTI which is not on this graph. Let's add a parameter. Add the parameter capital appreciation. I'm on the VVC, on the VectorVest composite. I'm not on the market timing graph. But the MTI, or the market timing graph, definitely tells us the market is still at a point where we're topping, where we're overbought. Put those two things together, this is the race. The market's trying to run the race, and right now is saying, I don't know, I'm tired. So what do you do right now? You invest cautiously. All that yellow in the color guard that you saw on the home page says be cautious right now. That is our traffic light into the market. Slow down. If you're trading, make sure you take your profits quickly. Do not be afraid to take profits off the table, because just as quickly as a day could go up, as quickly as a day could go down. As quickly as the days can go up, as quickly as the days can go down, down, just that quick. This is a time of either wait and see or take advantage of a trade, but for a short term. Don't be afraid to take the profit off the table. That's on the VectorVest composite, which looks at about 8,200 stocks, compared to the S&P 500, which looks at 500 stocks. A lot of the same characteristics. Last week it fell below the level of the 20-day exponential moving average, found the level of support, bounced, and is currently, like we saw in the VectorVest composite over the last 3 days, trading above it. But notice how the SPY is not moving sideways. It's pulling further down from that candle. I can't call that. I can call it an inverted hammer, possibly call it a hanging man. It could be a possible reversal, but I'm not going to call that an uptrend coming off of just 2 days. Nonetheless, it could be a reversal pattern. We are getting closer to the 20-day exponential moving average on the SPY, whereas we're not doing that with the VectorVest composite. We are moving sideways. But the VectorVest composite does track a whole lot more stocks than just 500. All right. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.